Intel, AMD, Nvidia. These are three iconic semiconductor companies that have been hot on the market in one way or another. So in this video, folks, we're going to pit each of those companies against one another to try to find out which one of those are the top investments. So we're going to load this up in the stock research tool to grade the businesses, and then afterwards we will do a price analysis on each of those businesses to figure out which ones are undervalued and which might be the better buy of the three. So we have Intel loaded up here, currently sitting at 31.46. This company's been on a little bit of a decline over the last year and a bit, and currently we hit a new 52-week low pretty much every single day. 29.91 is currently the lowest we've ever been. 56.28 is the highest we've ever been in the last 52 weeks. But this company's been around. They have the largest market share in the chip field. They fabricate their own stuff. They're making 2 new plants, but Wall Street does not like this company. It seems as old, beat up. Management doesn't know what they're doing. I frankly disagree. I think Pat Gelsinger has been a phenomenal CEO thus far. He's been completely transparent, and he's aware that this ship is a large ship and it's going to take some time to turn around. That being said, there's a lot of new kids on the block that are crushing it, and one of those kids are AMD. Now take a look at AMD, folks. AMD has been on the rise, but it's starting to come down as well. We've hit a high of 164.46 in a 52-week range and a low of 71.60. Now here's the thing, folks. Currently sitting at 85.45. This carries a much higher PE ratio than Intel. Now there's something to be concerned about because we want to find companies that are beneath the 22.5 range. And if we go over to Nvidia for a quick second, we can see that it's also somewhat of a parallel company as well. It had a very large run up, currently sitting at the 300 range, and it's currently sitting at 143.87, half of what it currently is. This is obviously with the split numbers, folks, so just keep that in mind. And the same thing that's happening with Nvidia, you'll find that with AMD as well. High PE ratio and share dilution, and we'll just take a look at that. We're ranking Nvidia an 8 out of 10 with high PE ratio, and as well as these two of these companies have been issuing out shares. And with AMD, yeah, they both are losing marks in the same category. So if you take a look at this, 8 out of 10 for AMD, 8 out of 10 for Nvidia. They both have PE ratios that are astronomically high, and they're diluting shareholders, which we don't want to see, folks. We don't want to see companies diluting shareholders, because essentially that means you are owning less of the business. We want to be able to own more of the business, and it's something that Intel is doing right, is that they have been decreasing the amount of shares outstanding. So that means the pie is getting smaller, and instead of larger, because that means you are owning more of the business. They have been decreasing shares by 3% over the last 5 years. The only downside with Intel, and where they're getting a point deducted, is in their free cash flow. So take a look at this, folks. They are losing -6% of the free cash flow. So it's down, rather, over the last 5 years. Their free cash flow has been down, but that is due to the fact that they have been building 2 new foundries. So they're pretty much reinvesting into themselves. Now, for me personally, is this a concern for me? In most case scenarios, yes, this is a concern, knowing that free cash flow is down. But from an Intel perspective, I know where that money is going to, and that's for a future investment. Now, the only problem is, if that investment doesn't pay off, then it will be a concern down the line. Do I like that free cash flow is down? No, but I know where it's going, and it's an investment in the future, so that is totally fine. Now, if I bring up AMD, now take a look at this. They have been crushing it in every single category. They have a high current ratio, which means they have a lot of assets on hand to cover their liabilities. They have amazing ROE, EPS growth is up, debt to equity is low, revenue growth is up, free cash flow growth is up, and revenue growth, net income growth is up as well. They have been making huge strides to compete with Intel, the giants of the semiconductor space. The only thing that's really bogging them down, as I mentioned earlier, is these high PE ratios. Are you overpaying for these earnings? So that's something to keep in mind, and we'll find that out in a second once we jump to the price analysis section, which I filled out for every one of these companies using conservative metrics, but I'll talk about that in one moment. And if we go to Nvidia, same thing, green across the board in all the same category as AMD. So it would be a fair comparison to pit AMD against Nvidia, because they're both almost pretty much in a similar camp. They make these phenomenal chips, but they may be overpriced based off their earnings and based off of the current evaluations. But we won't know that until we run the numbers in the price analysis section. But here's the thing, folks. Then you also have Intel on the other flip side, which has green across the board, but the stock price is going down and they have an extremely low PE ratio. And as we approach a bear market, we want to find companies that have a decent amount of cash on hand, and Intel is one of those companies. Now, I'm not saying Nvidia and AMD aren't, but Intel is very, very, very cash positive. Even with the declining free cash flow, they have a ton of free cash flow on hand. Let's just take a look at this, folks, just for one quick second. I'll bring you back over to Intel, and on average, $14.4 billion is our average free cash flow. That's our average free cash flow, where if we go to, let's say, AMD, their average free cash flow is only $819 million. Take a look at their revenue, guys. Their revenue is $21.58 billion. AMD, or Intel rather, Intel almost carries in free cash flow what AMD brings in revenue. Just let that sink in for a moment. Intel brings in with free cash flow on average what pretty much almost comparable to what AMD brings in with revenue. Now, how does that compare to Nvidia? Let's see, 29. So they're doing a little bit better. Nvidia is doing a little bit better than AMD, and they only bring in $4.6 billion in free cash flow. Not bad. That's actually not bad at all. They pay a very small dividend. It's quite adorable, actually. But these are all things to just keep in consideration, right? Because look, we are in a bear market. We are, well, if we aren't yet, we will be approaching a bear market. It's coming very, very soon. Likewise, with this app here that I have available, it's going to be available to you, my viewers and subscribers. So make sure you stay tuned for that. Announcements coming out very soon when this will be available and ready, so you can just load up any company you want and research it with the tools available. And we can just load this up with the income statements and stuff like that, and we can see what's going on here and figure out what is going on with this company. We can take a look at the revenue growth for Nvidia over the last decade. Huge jumps and strides, and we can go to the free cash flow statement. Let's load that up on a quarterly basis. I like doing annual. So on annual 2022, $8.13 billion. So here's the thing, folks. They have cash on hand, but Intel is crushing them with the amount of money that they have on hand. That being said, folks, they are quicker growing companies. It's clearly evident that AMD and Nvidia are running to get more market share than what Intel, and Intel's somewhat been dropping the ball in the last few years. That is evident. They've been sluggish, they've been slow, and they haven't been moving the ship as quick as Nvidia and AMD. And it's evident here because these companies have been firing and popping off like firecrackers, innovating by considerable amounts. Now, does that mean Intel is a dead stock? No, it doesn't. However, the death of all tech companies is the lack of innovation. Now, I'm not saying that Intel is lacking in innovating. However, they're innovating but at a slower pace. But if you have a company that is cash flow positive and it is bringing in revenue and it is bringing in numbers, there's still value there. Now, with that being said, we're going to load up all these companies in the price analysis section, which I've done so already, and we're going to run through the numbers and figure out what these companies are worth today. And if you're liking this video, folks, hit that like button, hit that subscribe button. It means a lot to the channel. It means a lot to me. So, take a look at this. We'll load up Intel first, And I'll tell you what I did. So I filled out all these boxes here. Now, I've done low revenue growth numbers to be incomparable of what we've been shown with Intel over the last 5 years, because it is a larger company and it is slowing down in growth. I can't expect this company to grow larger at its current pace. However, that could change once those fabrication plants eventually come up. Now, I'll stop blabbering along. We're going to click calculate, because I put a lot of my profit margins and free cash flow margins to echo what we've been shown in the 1 and 5 year, 10-year analysis numbers here that the company has been doing, as well as our price to free cash flow and PE ratios echo that of what is currently existed. And I've used extremely low numbers to try to figure out what this company might be worth. And take a look at this, folks. Current price is $31, and our average calculations comes out to be $50.76. So that means with a conservative revenue growth of 3%, and profit margins sticking at 22%, because that's clearly evident that they can do, with a low price to free cash flow, with a low PE ratio, $40 comes out to be our average to pay today for 10 years for a 13% return. On the high side, 61. That is pretty good. So Intel, check. It gets a check as an undervalued business. Now, jumping forward, we're going to do AMD, and I have same thing. I put revenue growth numbers in at a conservative amount, because here's the thing, folks. We're currently sitting at $137 billion business, right? Technically, by these standards, this is a higher market cap than Intel. So I have to assume someone of the similar realm of revenue growth in the next 10 years. However, I'm not doing 3, 4, 5. I'm doing 10, 12, and 14 based on what I've shown here. So that being said, hitting calculate, current price is 85, 45, and everything here is mirroring what I've shown on the board here with somewhat of a haircut. That's what I like to do. I like to give myself the most margin of safety. So I did profit margin at 8, 9, and 10%, with a price to free cash flow of 12, 14, and 16, and PE ratio of 14, 16, and 18. Now, with AMD, we are currently sitting at $35.87 as our average calculation, so it is in the red. Now, some may say I'm being a little bit too conservative, but here's the thing, and I knew this was going to happen, where we're getting killed. With our high price to free cash flow and high PE ratio, this is where we're getting dinged. We are overpaying for this business currently of what they've been producing. Now, I could bring these revenue growth numbers up, but it just doesn't make sense for me to do so. I want to give myself the most margin of safety, but for the sake of the video, I'll go 14, I'll go 15, and I'll go 16 just to see what that comes out to be. But on our average is 35. So this price has to fall quite a bit for it to be in our wheelhouse. Yeah, so see, even with a 14% revenue growth on the low end, 6 and 16 on the high side, currently sitting at 46, and even our aggressive estimate doesn't come close to our $85 current price range. So folks, AMD currently getting an X in terms of if it's undervalued or not. But it's a solid business overall, and I've been waiting for that company to come down in price, to be honest. Now, with Nvidia, I took a more of an aggressive approach, but granted, look at this. Just to give you a comparison, $358 billion market cap. $358 billion market cap. That's like double the amount of AMD, and like almost 3 times as large as what Intel's been doing, Intel's market cap. Currently selling for $143 a share. Let's run the numbers. So I did 15, 16, and 17% revenue growth. Somewhat of a haircut based off our 10-year and 5-year numbers. But here's the thing. I'm trying to get myself the margin of safety, as I said. Click and calculate, keeping profit margins. You know what? I think I did. I was way too. You know what? No, I did. I based my profit margins based off our 10-year numbers. So that's why I did that conservative amount. I could potentially go higher on these numbers here. It just doesn't seem to make sense to me. So I will, hold on. Let's see. Yeah, $110 on average calculations. I'm going to just change this real quick because you know what? 22 if I do 20 on the 20, 21 and a half, and then do 22 on the high side with price to free cash flow, keeping that just slightly underneath our 10-year average, and a conservative price to free cash flow and PE ratio. Let's see if that changes the numbers quite a bit. We got one green with those previous numbers. So with our new numbers though, our aggressive number definitely hits here. So 145.39. If you believe these numbers here, folks, on the aggressive category, you would be buying this at pretty much at par price of what it's currently at to get a 13% return with a 17% revenue growth over the next 10 years. If you believe these numbers, go for it. I don't. I need it to somewhat be in this realm here. And the only company that's doing that is Intel. And Wall Street hates this business, but it's a cash flow king. Go and load up Intel in the cash flow statement here. Let's take a look at their free cash flow. Look, yeah, their free cash flow is down because of the investment, but take a look at this, guys. $20 billion in free cash flow, and Nvidia is bringing in, what, 20-something billion dollars in revenue? The numbers speak. The numbers speak. Now, what have we concluded today based off this knowledge and based off this database of these three companies? I think in the next little while, AMD and Nvidia have the potential to surpass Intel. I believe they have the potential to surpass Intel. However, I think buying them today just doesn't make sense. It doesn't make sense because of their current evaluations. So what I want to see is those prices get hit hard. I want to see those prices go down, and now I can scoop up those companies at phenomenal prices, right? Because those businesses and what they're trying to do and what they are putting out is phenomenal. It's a phenomenal company. Both of them. I have Nvidia graphics card in my computer. I don't have AMD chips, but if I had to build a computer tomorrow, I probably would choose AMD chips over Intel. Based off a price point and based off a performance point, they are beating them in those categories. However, Intel, even though they are charging a premium for their products, they're still moving products. Yes, AMD has the gaming market focus, but that's one little niche more than Intel, but Intel is crushing them on every other front from a database perspective and so on and so forth. But the numbers are what they are. Which company is bringing in the money? And so far, even at the sluggish pace that it's been trotting at, Intel is that company, and they are currently an undervalued business. So does that mean go pick up Intel today? No, there's still much more data to be done and much more research to be done. Currently, to be honest, full transparency, I own Intel. And I own it around pretty much the $50 mark, what I'm currently averaging out to be based off my calculations. Because I truthfully believe in the business long term, and I truthfully believe in Pat Gelsinger's guidance for this business going forward. However, I would like to own AMD and Intel and Nvidia, and when the business eventually hits the price that I want it to hit, and if I believe truthfully that they have surpassed Intel in every single way, and I don't see Intel ever recovering from whatever they're doing, or if the fundamentals just completely change, you best believe I'll drop my Intel shares and go to AMD. However, in the ideal scenario, I own Intel and AMD and Nvidia. I just need to buy them at the right price. That's where I currently stand. And that's the video, folks. If you want to see a company analyzed, write it down in the comment section below. And this software here that I have in front of me will be available to you super soon. We're on the tail end of it to try to finalize it. It's going to be on a website. It's going to be great, and you will love it. We have a lot more things to offer apart from just the stock spec page, which it's pretty much a one-stop shop from analyzing companies, from the financial valuations to the price analysis section to the latest news on what the company is doing. We have obviously the financial statements as well as charts that plot out visually what is going on with the business, how it compares against SPY, the institutional holders, their assets versus liabilities, so you can see everything in a clear picture, and it'll all be available shortly. Anyways, folks, thank you so much for watching this video. I will see you in the next one. Take it easy.